Hey guys, so we're going to do one more video around rebalancing, and it's going to be talking about rebalancing within a taxable account. So previously, whenever we were talking about it, it was primarily thinking around your 401k or other retirement accounts. And so whenever you do that, whenever you do a rebalance, then there's no tax consequences. But on the other hand, if you're in a regular taxable account, there's actually some other things that you need to think about before you do any sort of rebalances. Let's take this example that I did last time that says the stock portion of your portfolio has gone from $60,000 to $80,000 again. And then again, like in the last example, we're going to say that our bonds stayed the same at $40,000. So notice this time I drew it a little bit different because that extra $20,000, we have to kind of think about it from a tax perspective. In a taxable account, before you sell something that has gains, there's a couple things to think about. So first of all is how long have you held that investment? And if you've held it for less than a year, then you pay ordinary income tax, so it's a higher tax rate. But if you held it for more than a year, then it's considered long-term capital gains. And in that case, you can pay a lower tax rate on those gains. So that's something to think about before you just blindly go in and do a rebalance, is understand how long you have held this investment before you sell any of it. Another possibility of how to get this back into balance to the percentages that you want, rather than selling some of these to buy some of this, if you're actually investing more money, then just think about investing that into the fund that has the lower percentage to try to get it back level. So if we do it that way instead, then we're able to get back in balance, and we didn't sell any of this, and so we didn't have the extra tax burden with that. The last thing that I'll say about this is, even though there may be a tax consequence of selling some of this in order to get back into balance, the saying is you don't let the tail wag the dog, and so it's definitely more important that you stay within the right level of risk that you're wanting to take for the investments that you have. All right, so hopefully this series of videos around what rebalancing is, why it's important, when to do it, and then also things to think about from the tax perspective has helped you out. If you have any more questions, feel free to reach out to me, and I will talk to you guys later. Thanks.